Everyday chat and chart live during the New York session. Here, real traders share the raw truth, their mindset, technical analysis, and execution. This is where real traders show their skill set. Welcome to Tradin TV. This is your stage to shine.
Hello, hello. Hello, good morning, guys. Samuel, JD, I'm trying to share my screen. Do you guys hear me? All good? All right. So good morning and welcome to a new episode of Chat and Chart. This is the London session, and this is your host, Saif Qaddoura. Hope you had a great weekend. We had some drama going on in the past weekend. We saw the Strait of Hormuz reopened on Friday, and then less than 24 hours later, they reclosed it. So we saw the risk on sentiment go on Friday, and then like early this week, when the markets opened, we saw a gap up on oil, we saw a gap down on gold, on a gap up on DXY, and weakness in everything against the US dollar as people or investors are running back to the US dollar as a safe haven. Okay, so okay, Mesa, I have a question related to gaps, how the pairs open at a gap when market is closed on weekends. Okay, so what happens is during the weekend or during the market is closed, there are some exchanges and there are some platforms that allow you actually to place orders. So with this very high pressure of orders, or this very high volumes in orders, it causes the market to open on a gap, because like the first tradable price by the liquidity provider is usually higher because of the big volume of orders to buy or to sell. Do these gaps open due to fear of lower supply and higher demand, vice versa? Yes, of a certain commodity. They create pre-orders, so they start executing just when the market. Exactly. Yes, you got it right. All right, so let's start with the economic calendar and then move to the charts. As always, we start with the economic calendar. Monday we have nothing of high impact, so we start with Tuesday. So tomorrow we have the retail sales numbers coming from the US and the core retail sales. So both of them are expected to be to come in higher than the previous. So if those come in higher, that's positive for the DXY. That shows more confidence in the economy and in the retail sector. If not, then that would be negative for the US dollar. Next, on Wednesday, we have the CPI and we have the crude oil inventories. The CPI is expected to come in higher. Now, the last reading was not the previous one, the one before. It was 2.4. Then, what was it? Yeah, it was 2.4. Now it's 3%. Now the forecast, this is from the UK, yeah? And the forecast is 3.3. So they're having like higher inflation in the UK and lower growth or slow growth. So what do we call this situation? We call it stagflation, when the economy stagnates and stops from growing while inflation is way too high. Okay. I don't know about a certain exchange. Now my gap is closing my. You are welcome, Mesa. Okay, so next we have the crude oil inventories coming from the US. The previous is a shortage of almost 1 million barrels. The forecast is a shortage of 1 million barrels. And last week we saw the first sign of weakness in the supply chain of energy supply chain. we saw that the oil or the inventories of oil in the US are starting to dry up. So this would actually mean higher prices for crude oil. All right, so that's it for Wednesday. We move now to Thursday, and I believe we only have 3 days of high impact news this week. Tuesday, Wednesday, and Thursday. So this would be the last day of high impact this week. We have the weekly number, which is the initial jobless claims. The previous was actually a good number, 207K. The forecast is 212K, 212,000 jobless claims. So it is expected to be slightly worse than the previous. We'll see the actual. If it comes in lower than this and the previous, that would be very positive for the US dollar. If it comes in between the previous and lower than the forecast, then that's also positive, but less positive, of course. And if it comes in as expected or higher, that would be negative for the dollar. Okay, so next we have the S&P Global Services PMI and the Global Manufacturing PMI for the month of April. Now, the previous reading for the services sector was 49.8, which is below 50, meaning that it's in the contraction territory. The forecast is 50.1. So an improvement, and we're back above 50 or expected to be back above 50, which is expansionary. All right. As for the manufacturing, it was 52.3. It was higher than 50, so above 50, meaning that it was expanding, or like even if it was like lower than the previous reading, it's still expanding. The forecast is an improvement to 52.5, so above the previous and above 50. So it's expanding and expanding with a higher pace than the previous reading. If those numbers come as expected, that would be positive for the US dollar. If not, they cause negativity to the path of the US dollar. Okay. All right. So, do you have any questions before we move to the charts? Do you have any questions before we move to the charts? Okay. Go to the weekly. All right. Let's move to the charts then. We stop sharing, and then we go right to the charts. There it is. All right, guys. Okay. So the weekly chart of the DXY. Let's take a look at this. We reached almost the what's it called? The 97.6 exactly, as expected in last Monday's live stream. So we got rejected exactly from the same level that we marked last week, which was 97.6. And then we closed higher for the day on Friday. Now we're expecting to see something like this. Now, in contrast, let's take a look at Euro, which was expected to stop somewhere around here, which is 1.1830. It stopped at 1.18, almost 50, and then got rejected to the downside, which is bearish. And let me show you how we arrived to this conclusion. That's basically, guys, the 61.8 retracement on Fibonacci, and on the dollar, that's also the 61.8 retracement on Fibonacci. So that's pretty much it, guys. That's the reason why Fibonacci works. Fibonacci does work. Thank you. How do you know that it's my birthday? Thank you very much. All right. Then we move to 4 hours. So let me just take a look at the weekly. How did it close? It closed somewhat bearish. It's still bearish on the weekly, DXY, to be honest. But with the fundamentals happening around, especially the Iran thing, that they closed the Strait of Hormuz again, and they're starting to feel deception from Trump's side. So now they're expecting that they're on the verge of another round of escalation. So, meaning, in other words, the war might actually continue after this ceasefire. Okay. They're failing at negotiations. Okay. The daily is somewhat positive. The 4 hours is still negative. Up to this minute, it's still negative, but it's expected to turn around and go up, but it's still too early to decide, actually. As long as we're below this level, which is 98.5, we're still bearish, or we're still negative, but I'm expecting to see a close above 99 by tomorrow, and then we continue going up. All right. Let's now move to euro. 4 hours. Okay, it got rejected from the 50-day moving average, as you can see here. So it's above all major moving averages. The daily is negative. It closed bearish on Friday. We had a gap down today, but look what caught it: the 10-day moving average and the band. The weekly closed somewhat bullish. So yeah, it's exactly the opposite of the DXY. This is 1 hour. Yeah, now on the 1 hour, it's still like euro is still bullish and the DXY is still bearish. But I'm expecting, based on higher time frame analysis, I'm expecting this to flip pretty soon, maybe by tomorrow or after tomorrow. I don't know. I'm not here trying to time the market, but I think this strength will not continue for long. If our high time frame analysis is correct. Okay. Now I think it's time to move to GBP/USD. Yeah, pretty much the same pattern happened. It hit the 61.8 area and then got rejected from it. We saw a gap down because of the gap up on the US dollar. And then on 4 hours, still bullish, very similar to euro. On 1 hour, still bullish, very similar to euro. And it's like, as you can see, it's sitting on the 200-day moving average. So the 200-day moving average is the last safety net for euro and GBP. And look at both of them. Both of them got rejected from the 200-day moving average. That's a very important level. That's a very important moving average. If it breaks below and closes below, then we might be looking at deeper correction or maybe a continuation of the previous bearish movement. Okay. Now, Bitcoin is still stuck in the same range. It's still below 75, 76. Ethereum, however, is starting to charge. Maybe we're looking at a breakout soon, but as well, it's still the same, still ranging. Now we take a look at the Nasdaq real quick. It's still very bullish. On the 1 hour, of course. Let's take a look at the weekly. Weekly closed very bullish, and it actually closed at a new all-time high. Yeah. So they closed on new all-time highs. Let's take a look and see the targets of this wave based on Fibonacci. We might be looking at 600 more pips to the upside, between like 600 and 1,000 pips to the upside. So this area is expected to be the target for this movement. Now we go to the daily. Daily is still very bullish. 4 hours is still very bullish. Okay, yeah, it's very, very bullish. Even the 1 hour is way too bullish. So yeah, you know how bullish this is? Like, let me give you an example. I would buy here with my stop loss here and my TP here. So that's an easy 1 to 4. That's how bullish the Nasdaq is. Okay. Then we go to gold. Okay, now gold is a bit tricky because it's moving exactly against the US dollar. And the last week, it closed, the candle was bullish, but it still managed to close below 4,900, which is a very important level in the path of gold. Now, if this week it managed to close above 4,900, then this scenario, which is like a drop here, then going up, might be too weak. But if not, if it managed to close, like if the war continues, we expect to see another round of dropping on gold, and we might see the 3,800 that I mentioned many, many times before. If not, then we're going back up. Now, if we take a look at the daily, it went up to 888, but then got rejected and closed at 830, which is inside the band, meaning that's a bearish sign. We might be looking at another round of dropping on what's it called? Gold. Okay, so on the 4 hours, it's still bullish. Yeah, it's still bullish. Nothing changed yet, but I'm expecting to see a change in behavior and a change in direction very soon in gold. So I will be looking to sell anywhere if we see something like this here. So on lower time frames, like 1 hour and below, I will be looking for 3 lower lows and 3 lower highs. Once that happens, I will draw my trend line, and I will be more than happy to start selling every time it reaches the trend line. I will be going down with it to this area, but I need to confirm the continuation of the downtrend. And how do we confirm a downtrend or a trend in general? We need 3 lower highs and 3 lower lows. And when we're talking about downtrends, if we're talking about uptrends, obviously it's 3 higher highs, 3 higher lows. So yeah, I'm waiting to get a confirmation, and I'll be more than happy to short it all the way down to 3,800. Last week, I had a sell order almost from it was 835 with stops above 75, but then on Friday it dropped pretty well before they announced the reopening of Strait of Hormuz. So I moved it down to break even. What happened is when they announced the reopening, it just went back up and hit my stop loss at break even. So now I'm going to try again to catch a big move to the downside. Okay, guys, so do you have any questions? Do you guys have any questions? How's silver doing? Yeah, it's pretty much the same. Very similar to gold. Yep. Okay. Although, like, it looks much more stable than gold. Good morning, back at you, Abdullahi. So I don't know if like this is already done, because like I had it marked like this, like we reach here and then we go to 54, but we reached 60. Like, is it possible that this move is done? Let me just like take a look at this. If we project it from here, no, we're way off. We might be looking at a much deeper correction. So no, I'll be waiting. I'll be waiting. I will not FOMO my way into this. Daily, yeah. So now let's assume that this is the fourth wave, and the target would be around 52 to 55. Yeah, it makes a lot of sense. Makes a lot of sense. 4 hours. Yeah, let's wait and see. All right. Abdullah Habibi, I already did. We looked at dollar. Go watch the video from the start once we finish the stream, and you'll see the gold will be bearish. Yeah, you'll see the analysis for DXY. But anyway, this week it's like the video is very short because we have a short economic calendar. We have not moved much last week, so nothing really changed in terms of technicals. Um, but yeah, thank you, Meza. Okay, thank you, thank you. Okay, let me just like make sure that no one has any more questions so that we can call it a session, and I can wish you a great week of trading. And okay, thank you. You are welcome. Thank you, Avik. Thank you. All right. All right. Yeah, I guess that's it for today. Very short session. Um, it all depends on the what's it called, the developments of the war and the negotiations between Iran and the US. Although Iran said it very clearly, they're not interested to go and do another round of um, negotiations with the US because um, they're not actually being honest. The US side, of course. So let's see how that turns out to be. No one likes war, of course, but um, if it's going to happen anyway, might as well we make some money. All right. So thank you everyone for watching. Thank you for tuning in. I appreciate the birthday wishes. I appreciate all the kindness. Thank you very much for joining. Good luck trading this week. And if you have any questions, you know where to find me. Take care of yourselves and bye bye.